People are talking about negative interest rates. What the heck does that mean? When you save money, you want to see your money grow. You do not want to see your money decline. A negative interest rate means that a central bank and potentially private banks will charge you a fee to deposit your money in the bank. Instead of receiving interest on the money you have in the bank, you, the depositor, will have to pay a fee each month or quarter to keep your money deposited with the bank. The fee might range from 0.5% to 5% annually. This fee is called a negative interest rate. This episode of Aspire to Money focuses solely on interest rates set by the banks. It does not consider inflation, which is another subject. Let's talk about the theory behind negative interest rates. Theoretically, many economists think that negative interest rates will do two things. One, encourage banks to lend more money to businesses and households, and two, encourage business and households to borrow more money. Many economists think that the result will be a growing economy. How? Most countries have two levels of banks. There is a central bank that handles money flows between itself and private banks. Just like you deposit money with a private bank, the private bank deposits money with the central bank. In the United States, the central bank is called the Federal Reserve, or the Fed. The theory is that if central banks set negative interest rates on the deposits that a private bank has, then the private bank will keep less money with the central bank and loan it out to businesses and households. The private banks would face two choices when the central bank starts charging them negative interest rates. One, they could choose to pay the negative interest rates and accept lower profits, or two, they could pass the costs down and start charging businesses and households for keeping deposits in the bank. Time out for a request. If you find the Aspire to Money channel helpful, please help support the channel by subscribing. Back to negative interest rates. Has this ever happened before? Yes. In 2014 and at times since then, the European Central Bank started charging private banks negative interest rates. Japan has also implemented a negative interest rate policy. Scandinavian countries also had negative interest rates at times since 2008. Back in the 1970s, Switzerland also used negative interest rates for a time. We've barely scratched the surface on the subject of negative interest rates. Tune in to next week's episode where Aspire to Money discusses your options for dealing with negative interest rates.